Good morning, everyone, and welcome to the Daily Trader with Kevin Hincks, live from the SIBO floor. We got two paper money trades for you today, both earnings plays for this afternoon. Google Alphabet is one, and then AMD is our other name. So two good names, high-profile names to look at today. So let's get to our first one, and that is Google Alphabet. Now, Google Alphabet is a name that has had a good last 6 months, up 29%, had a good last year, up 45%. So it's had a nice run, sitting just above $205, trading right at $206 right now. Now, the expected move for Google Alphabet going into today's announcement, $12.50. That's the one-day expected move, a snapshot. Right now on the Thinkorswim platform, it's got $12.50. The paper money trade we're looking at today is a short put vertical in Google Alphabet. So the stock has rallied a little bit today. What we're doing here is selling both in the February 7th month expiration, selling the 195 put, buying the 185 put. So a $10 put vertical in Google Alphabet. We're selling that. We put it in for about $2.10. It's trading lower than that now, as Google Alphabet, as you see, is rallying. It's up $4. It's rallying today hard. Now, the thing you can do is you can either sell that for the lower price, around $1.70. It's trading $1.65. Or what you can always do as a trader here is adjust your strikes, right? Remember, you've got $12 on the downside with the stock trading 206 is about 204. Maybe you sell the, or 194, maybe you sell the 197 and a half, say something like that. Maybe you change your strikes, but right now, let's deal with the trade that we did. Selling the 195, 185 put vertical in Google Alphabet, collecting about $2.10. It's trading about $1.70 here. The risk on the trade is the difference between the widths, which is $10, and whatever credit you were to take in. That's the risk on the trade. The max profit on this trade is the credit taken in on the trade. That's your max profit. The break even is that short strike, in this case a 195, minus the credit you take in. That's where this trade breaks even. Okay, so a short put vertical in Google Alphabet. Remember, it's profitable in 3 of the 4 scenarios. On the upside, unchanged. On the downside, small, but it's got risk below the 195 strike. Okay, now let's get to our second trade of the day, and that is AMD, Advanced Micro Devices. That has earnings coming out as well, and if you look at the chart on AMD, it's not a very impressive chart. The last 6 months, they're down 13%. The last 12 months, they're down 33%. And in the last month, they're down 6.5%, despite their work on generative AI chips and competing, in their views, competing with NVIDIA. But it doesn't seem like much of a competition. So AMD, though, this stock has sold off significantly. It seems to really move on earnings. So that's what I want to look at in terms of a paper money trade, is something that's movement in either direction, and that's the long iron condor. Remember, a short iron condor is a range-bound trade. Well, the long iron condor is simply the opposite of that. It is profitable on a big move and loses money. The risk is on a range-bound movement on the underlying. So let's get to our trade. If you're looking for movement, which we are here, I suggest you go out a little further in duration. Now, I went to the February 14th expiration here, and I bought if you look out, there's a $9.80 expected move today, right, on that move, or tomorrow, actually, the one-day move. For the week, about $10.60. For next week, February 14th, it's $12.40. So, using those numbers, I looked at the 120, 125 call vertical in the February 14th expiration. I looked at the 110, 105 put vertical and the February 14th expiration. We put that in around $3.05. It's trading right there, about $3, between $3 and $3.05. The risk on this trade is the debit paid, right? The max profit is you want one of these trades to go at or near $5. And the break-evens are the long strike, the 120 call, plus the debit paid. So maybe 123.05 on the downside, 110 minus the 305, which is 106.95 would be the break even on the downside there. So this is a strategy that plays for the big move in either direction, and it loses money. It's not profitable on a range bound move. But the risk, remember, the risk in the short put vertical is the width between the strikes minus the credit. The risk on the long iron condor is the debit paid. So 2 trades in 2 names coming out with earnings today. That's our show. That's Daily Trader for today. Have a great day, everyone. I'm Kevin Hincks.